Good day, everybody. Good evening, depending upon what side of the globe you're on. My name is J Pinkert. I'm a trader, coach, mentor at yourtradingroom.com. I teach proprietary traders, run swing trade programs there. Hello, Matthias. How you doing today? Everyone ready for Jackson Hole tomorrow? Who was here last week? If so, you remember penny wise and pound foolish, right? That was one of the better forecasts made last week. We talked about the weekly wedge line, so let me get the camera going here. Penny wise and pound foolish. So the pound rally came to an abrupt end. I think this is just the beginning of this. We talked about this wedge line being tested, could not close above it. It was basically a weekly wedge line. Anyone recall it? From the last few weeks we've been talking about this. Archiga. There's your daily. We may bounce, but I think they're going to go for the stops here. But let's take a look at what's behind some of the recent moves. Okay. The dollar index chart keeps disappearing on me. Not sure why. All right, obviously, we've been in a 4-month trading range going back to early May. So the question I ask myself is, where are the stops? Do you think there are a few sell stops here? Under 73.5? How about under the May low? Okay. So we've had a couple of days of dollar strength, and my best guess, and it seems to be consensus view, is there'll be no announcement of QE3 tomorrow. The dollar obviously is getting a bid for that, and really the linchpin has been this. And we had a pretty ugly close in the S&Ps. Everyone see the S&P chart? Get some Y's in the room. Okay. So it looks to me like, unless there's a very positive surprise, that we're going to see some type of retest of the panic low in here over the next couple of days, especially if the market doesn't get what it hears, let alone what's happening in Europe. Okay, let alone the market's reception to Buffett's bid on B of A. So to me, it looks like unless we take out today's highs, there's some kind of retest coming here. And that's going to mean the risk trade-off. Actually, I'll get to the U.S. dollar yen, although it's having a pretty nice run. The other asset class that I think could change things for at least a pullback in U.S. dollar yen is this. The TLT. We've had two drives to a top in treasuries, and the U.S. dollar yen is used as carry trade on this. So perhaps we get one more charge to new highs to complete a pattern. I look for 3 drives. We've had 2. Even at new highs, I don't believe the RSI is going to confirm. Everyone see the divergence here? But there could be one more push up if Ben tweaks something with maturities or some nuance to support the long end of the market. If that happens, okay, so as the bonds started to come down, the yens rallied off the washout low from last Friday. I think even if we have seen a bottom in the end, and I kind of doubt that we have, I think there could at least be a pullback to this level, 76.40 or so, back to old support. Okay. So really, the macro scenario with all the different asset classes that I just brought up is I'm looking for a retest in the S&Ps, possibly a marginal new low, maybe into Monday, Tuesday, if the market continues to be disappointed, which I think will give us a 2-day run or so up in the dollar. Can't rule out that this is the bottom of the Dixie, except I do believe there are so many longs with stops under that 73.5 level that I showed you that I really believe the market wants to take those stubborn bulls out first before a major dollar rally. So let's stay with the pairs. What chart are you looking at? Okay, Rob? You can see the end. Let's start with USD CAD here. Take a little longer view on the time frame. I think there's another high coming in Canada. And for people that have been following me, Rob, why do I think there's the potential for another high in USD CAD? Well, maybe that bull run has begun. That's right. So you guys have been learning this. So what does a confirmed high imply? You guys know it's confirmed. What's the implication of that? That's right. 5 pips, got it. Possibly a non-confirmation, but normally markets don't top when they confirm. So that's what I'm looking for. They may have taken care of business. I had this line drawn in here before this little washout here. I think they took care of plenty of stops here. So I'm looking for Canada to trade over par. Any questions on that? Before I reassess. Maybe 102. Questions? Also, with the dollar, remember the dollar index was almost at new lows? Look how shallow this retracement has been. Certainly it's not halfway back or 61.8 back, it's probably 38. Well, we can look at the daily. There's a confirmation, right? Look at this advanced fib, 5 fib is impulsive, right? Look how it hardly took it any time to get here. What have we done here? We've marked time by moving sideways. To me, this is corrective. It may have ended today, and I think we're going to make a move above these highs. Again, you had a confirmed high here on the daily time frame as well. I like longer term time frame divergences, but I like the shorter term to line up so I don't have to risk 500 pips. Okay? So I'd like to see it in the hourly too. It could be considered a bull flag. You could call this A, B, C. Maybe we finish C here and we're on our way. But to me, this is constructive action, considering that the dollar index was on the verge of breaking down. Why is Canada up here instead of down here? So on a correlation basis with dollar weakness, you have to respect how well the USD CAD is held up, don't you? So for now, I'm very constructive on it, looking for these highs to be taken out. Questions? Okay, let's move on to the British pound. This to me looks like an ABC. For the last, I don't know how many months, I've had this weekly wedge line drawn. We broke down back in the June time frame, and then this is a retest of it. And look how many times it tried to close above it, and it couldn't. So it's my view that cable, the British pound USD, is going to go hunting for stops under this low. Maybe this was ABC for A, and this is ABC for B with a C wave to come. Anyway, there is potential for this move to be 1.618 or some type of fib extension of this move. And this was a 10,000 pip move about, right? 5780. Let's call it 900 pips. So there's potential for a 1400 pip move from here. So that gives me 153, 154 in here. That's my target. 153, 154. I need to refresh. You can see it, right? Okay. So this could have been ABC for A, and this could be an ABC for B with a C to come. I call a wave C or 3 wave because it's normally a fib extension of 1 or A. Okay? So this was 900 pips. So at the minimum, you expect equality. So from here, that's going to take you down under these lows about the 157 level. And if you have a fib extension of it, you're talking 153 or so down here, which will end up being the neckline of a head and shoulders top formation. That's my Noster Pinkert call on this. So that's why I made the joke earlier in the day not to be penny wise and pound foolish. So I think that my view on the British pound USD is fairly concise and pretty committed, and no wishy-washy. If it does this, then it'll do that, but if it does that, then it'll do this. You don't hear too much of that from me, do you? Any question on my stand and cable? I think there's plenty of sell stops here. They took out all the buy stops on this move up. Okay? They took out these buy stops. The only bears left standing were here at the 67 level, going back to the end of April. Okay? So now they're working on, the pressures on the bulls. All right? They're going to try and hold here, but I think they're vulnerable here. And this is the grand prize, going back to the early July low. Questions, comments, disagreement, healthy debates? Okay, very well. So there I have a lot more conviction than I do here in Euro, because as long as this pairing is uptrending, and I think there's more left. It was confirmed, wasn't it? So when this is heading up, it tells me to favor the euro on the long side, favor the British pound on the short side against the dollar. We start getting through this 88, 80 level, then you're talking up around the 90 level. Maybe we have one more high. This is the first drive, here's the second drive, maybe we have another. So it tempers my bearishness in euro, which makes me think that even if we sell off some more, that there's potential for euro USD to regroup and still try and take out stops here, stops here, but it's not exciting enough for me to want to buy it. Maybe we're going to pull back to 42 again. Or maybe it's bad and cable is worse. That's also another scenario that this pairing could be forecasting, is that maybe the sovereign debt issue moves across the channel. You should still be able to get it on your chart, and even if you don't trade it, it gives you a pretty good message, Soul Man, as far as whether or not you should be shorting euro or shorting pound. We'll get there. So euro 2 could be breaking down, and maybe cable's worse. And the reason that could be is, look at the monthly chart of euro compared to the monthly chart of the British pound. Look at this, how weak this recovery is from 2008 compared to what we did in euro. This to me looks more corrective even if we went to 115 euro, whereas British pound looks like it could go for these lows again on the monthly. And why is that? What kind of low was that in 2008? I know this is pretty macro. You're not going to be able to day trade this information, but it could be helpful. Do you agree? Can I get some whys in the room? That sometimes having a macro view can help you with your biases on which side of the market to trade. Thank you, guys. Okay, well that's as macro as I get, monthly charts. Okay, now to the yen. So we had the wash and rinse here last Friday, and maybe it's got 78.20 in it, but I still think, even though we had a non-confirmation, that there might be one more low left in this. I'm thinking there might be a 74 handle left on the yen. But initially, I'm going to be looking for, possibly down here around 76.40, 76.30 for that to hold. But I haven't turned bullish yen. Any yen bulls in here? Rob, you are? Okay, what's your upside target, Archiga? You looking for up here? I mean, this could just be an ABC. 80? Okay. You could be right. I think before we get to 80, though, that it's going to have trouble here at the 78.20 level. And I wouldn't just launch here. Perhaps I'd look at pullbacks around the 76.5 level first. And what may trigger that pullback is if the S&Ps really melt and people move back into bonds and gold, they use the yen for the carry trade. As US dollar yen was going down, treasuries were going up in price, down in yield, correct? So if we've only had two drives and there's one left. Yeah. Last week. I was bottom picking it. I actually was a victim. I got stopped out on this spike. How's that for honesty? And never recommitted to it. Good for you. You recommitted? Nice trade. Yeah. Sure, they just cleaned out every stop. Not only these lows, Rob, but, they even went to the March, took out the March lows, too. Took these out. Yeah, I believe it's in a bottoming process, and you may be right. It may have bottomed. I still think, though, that there's maybe a chance for one more new low. But you could be right. That may have been it. Congratulations on the recommit. That's not an easy thing to do. Sometimes it takes more than one swing of the bat to get it. You get more than one strike in baseball, right? Good hitters hit 300. And it creates liquidity for them to put their positions on or cover their positions. You know, my cynical view of the markets is that markets will shake out as many participants as possible before the move they're looking for happens, most likely without them. Kind of like what happened here in the end. For not just me. Okay? So we've had this huge yen rally, and we've had this big British pound break, and the guppy, GBP, is caught in between. So we'll see. I have a small short position. The machines run the game, Phi. Quants. We've been hearing more and more about it, right? Speed of light. Okay. I think the Swiss is going to correct its advance here. You know, we had a real nice rally in the Swiss, 10 handles. Maybe we pull back towards 75 or so. I think there's some money to be made on the short side of Swiss for a correction, not for new lows. We're diverging short term. A lot of divergence. Here, 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 up here. So this kind of has a wedge look to me. I think we'll go looking for the stops under this low. I'm negative commodity currencies, the Aussie, the Kiwi. At least for now. And I'm not going to rule out that this might be an important low in the dollar. Someone had a question. I wanted to look at gold. Let me pull that up. I'll refresh in a minute. And let's look at the gold. I'll use the GLD ETF. Everyone see it? So, everyone have the gold chart up? Get some Ys in the room? Okay. So, we pulled back $200 here in a matter of 24 to 72 hours. Held today as the market sold off. It's going to be interesting to see how much legs gold has. We've had divergence here, right? A lot of people liquidated out. Should we take out this low, I think there's a good chance for 1450, 1400 in the months ahead. Here's your weekly. You have some bully bands down here. That's a pretty ugly week. Not quite a key reversal. It's about 1340 there. So gold's a little too wild for me. But I don't believe the break in today's low will hold. So that's my take there. But again, really the whole ball game is going to be what happens here. Wrong chart. in the S&Ps. And to me, it looks like some type of retest of these lows is coming. Any questions on anything that I covered or anything I didn't cover? Did everyone learn a little something new today? You have some things to consider in your trading after the Bernanke comments tomorrow? What everyone else does that he won't talk about QE3. And the dollar will pop, and the S&Ps will retest the lows into early next week. Maybe take them out. 1050 is a target a lot of people have in S&Ps. Thank you, Chris. Thanks, Viv. Anything else? You guys know where to find me if you wanted me to mentor you or have more access? At least for a few days, yes. Into next week. Maybe longer. What's your most valuable currency? That's right. That's where you could find me. If you're interested in their proprietary trading program, you go to there. And the secret to FX trading is that there is no secret. Okay? I want to thank everyone for their attention. I appreciate it. Yes, we post. Say hello to everyone at FX Street for me. Thank you. Adios, everyone.